Hi guys, welcome back to this Money Control live stream. You're watching Opening Bell with me, Nandita Khemka. It's a Tuesday morning and the cues are pretty strong from global markets, although Asian markets are mixed. But, whether or not, if we open in the green territory, whether or not we manage to sustain those gains is something that, needs to be watched out for, given the fact that yesterday, although we saw a subdued start, we did reverse all those losses and saw the Nifty cross that 24,300 mark as well at one point in time. But towards the end of the session, we had reversed course once again, and we saw some bit of profit taking kick in, and the Nifty in the end ending extremely flat for the day. But today, of course, we'll be watching out for key levels on the index, but 24,000 to 24,100, that's the support level that has been emerging so far. And we have managed to defend that 24,000 mark, even though we have seen selling at higher levels. Lots to watch out for, lots of stocks in focus. Hindalco, Britannia, ONGC, all these companies reported their numbers post-market hours. So lots of results reactions and lots of mid-cap names will also be reporting numbers, including the likes of Natco, Pharma, you have Motherson, Sumi, or Samvardhana, Motherson, so to say. These are some of the earnings to watch out for. But of course, all your stock related queries will be in focus as well. So keep your queries coming in on a live feed. We'll try and take them up and get them addressed by our technical expert on the show. But of course, as usual, before we move any further, let's take a look at the top headlines at this hour. Post-election rally continues on Wall Street. The Dow ends above that 44,000 mark for the first time, while the S&P 500 closes above that 6,000 milestone. Well, meanwhile, Bitcoin has soared to record levels of above $89,000 on Monday. However, Asian markets trade mixed, with investors exercising caution. The GIFT Nifty is suggesting a muted but positive start for the Indian market. Oil prices fall after China's latest stimulus plan disappoints investors. A stronger dollar also weighs on prices. Brent is now trading near that $72 a barrel mark. Meanwhile, gold prices have eased thanks to strength in the US dollar. Hindalco reports good second quarter earnings as aluminium business beats estimates, while for Britannia, revenue grew over 5% and it is the second quarter of 8% volume growth for the biscuit maker. October CPI will be announced later this evening at 4 p.m. The headline CPI is seen at 6% vis-a-vis 5.5% in September amid rising food inflation. Meanwhile, IIP for September is expected at 2.4%, much better than the August reading. Well, taking a look at the cues for trade then. Yesterday, of course, it was a highly volatile session. It was a seesaw session, so to say. Given the fact that we ended the day in the red, we came off 200 points from the day's high. In fact, the Nifty at one point in time was above that 24,300 mark as well, but failed to sustain any kind of gains because we did see profit booking at higher levels. Broader markets, however, continued to slump. You saw the small cap index shedding over 1%. Even the mid cap index was down in trade. It was down by 0.8% or thereabouts. The breadth was also firmly tilted in favor of losers yesterday. Banks and IT, these were the comfort corners. Banks, of course, snapping out of a two-day losing trend. IT, however, continuing to outperform after Trump's victory in the US elections. Metals, FMCG, these were some of the stocks that were among top drags. And of course, you saw Asian Paints slump 8% after, a weak showing in the second quarter. In terms of options cues, the Nifty put call ratio was unchanged at 0.9, and stocks in the F&O ban list today, there are two new entrants, Aarti Industries as well as Hindustan Copper. Still in ban would be Manappuram Finance, Aditya Birla Fashion as well as Granules India. And the foreign investor sell-off continues, right? The FII net sell figure was at 2,300 crore rupees in the cash market, but DII support continues. 2,000 crore worth of stocks are bought in the cash market. But let me bring on board then our technical expert for today. Joining me is Nirav Chheda, who's from Nirmal Bang. Nirav, great to have you on the show. so far, although we've seen profit booking, we've managed to defend that 24,000 mark on the downside. So 24,000, 24,100, that has emerged as a key support level or key support zone for the index. But any signs on the charts that if we see any kind of bounce, in the next couple of days, are there any chances of those gains sustaining? Because so far, we haven't been able to sustain any kind of strong gains that we have seen, and we've literally given up all of those gains and ended flat for the day.
Yes, hi Nandita, thanks for having me. See, at this point, Nifty, from sub 26,000 levels, this is a 2,000 point downside that it has seen. It has come to its 35 weekly average support, and that is placed around 23,900 odd, which it tested. This is on the futures, okay? It tested and it has bounced back since. And I believe this is a good support area for this index, because in the long run, this average always proves to be a very good support for Nifty. We expect Nifty to bounce back from here. Specifically, the data that you spoke about, like the PCR, it is quite below one, it's around that 0.9 odd levels. VIX, this is consistently, below the 15 levels in spite of the selling. So that's a good sign. Also, open interest is quite light, so don't see much positions with a lot of people on the index, and that would probably help going forward as well. So, that follow-up selling is not likely to come in now. So having said that, on the technical charts, good support at 24,100 odd, which is where it is bouncing from. We expect Nifty to now move up from here. It can at least go up towards its 50-day moving average, which is placed around the 25,000 odd levels. So yeah, all in all, we expect Nifty to move up. I think the worst is over from a near-term point of view. Small base has been formed, and Nifty can go up from here for that target of 25,000 level. So buy at current levels, buy on dips. Your stop loss should be 24,000 now. So if that is breached, you can probably look to exit longs, but till then, you can continue to hold on. From a bank Nifty perspective, see, at this point of time, Bank Nifty at this point of time hasn't really broken its previous lows. That means the higher top, higher bottom formation is still in place, which is a very good sign. In spite of Nifty, not maintaining the same, Bank Nifty is quite strong of the two indices, and I expect Bank Nifty to now, lead and probably go up towards that 52,800 to 53,000 levels going forward. So it's a good consolidation which is going on. Also, most of the stocks, specifically the private ones, they've seen a lot of shorts in the last 6 months now. We are seeing short covering action. That is why you're seeing Bank Nifty sustaining. So, the heavyweights like HDFC Bank or ICICI Bank or SBI, they are not falling. In fact, they are now looking to move up, and which is a very good sign for this index. A good support area is around 51,300 odd levels, and that should be your stop loss as well. Once Bank Nifty crosses over 52,000 levels, you will see very good buying coming in this index, and it can probably then go up towards that 53,000 odd levels.
Okay, those are the key levels to watch out for, and of course, Bank Nifty looking the stronger among the two indices, Nifty and Nifty Bank. I will just talk about ICICI Bank, since you mentioned, all these private banking heavyweights. This morning, we have a good report coming in from Morgan Stanley, and they have maintained their overweight rating on the stock. Target price has been raised to 1650 rupees per share. The stock is at 1276 or thereabouts at the current juncture. So that's a good uptake. And Morgan Stanley has said that, this ICICI Bank remains its top pick despite its strong outperformance. And, it is seeing a case for re-rating as well, given the fact that, earnings are expected to outperform its peers. 1650 kind of levels on ICICI Bank. Do you foresee that? And would you say that this is the strongest out of the other private banking heavyweights like HDFC Bank or IndusInd Bank for that matter, or Axis Bank even?
Yeah. So, probably that's a correct statement at this point of time. Why? Because in the last 2 or 3 years, this has been the leader. So, the leadership was always with HDFC Bank in terms of the price point. It would always go up. But now, in the last 2, 3 years, that has gone into consolidation and ICICI Bank has taken over. We have seen this stock go up from 800 odd to about 1200 in the last couple of years. Slowly and steadily, it has moved up. In fact, from sub 700 odd levels. So it is making a higher top, higher bottom formation where most of the banks have been in consolidation or are probably even seeing selling. So yes, this has been the leader and it continues to make a higher top, higher bottom formation in spite of Nifty coming down quite drastically. This stock hasn't really come down. So I expect this stock to move up. And yes, I do see 1500 levels coming in. This is a stock which is a little slow in nature, but slowly and steadily it is moving up. Good support level for this stock now is at 1220, which it retested quite recently. So that should be a stop loss, and we expect this stock to move up from current levels to 1450, 1500 odd.
Okay, expect the stock to move up to levels of 1450. In fact, 1500 also not ruled out on an ICICI Bank. But I want to talk to you about a Hindalco. Given the fact that numbers came out post market hours, profit has seen a twofold jump, beaten expectations. Revenue also saw a good 8% uptick. Even margins, for that matter, have come in double digits at almost 13% or so. The operational performance has been pretty strong, led by the Indian business, and even the aluminium business, of course, has done pretty well. Metals have been quite volatile, right? And they keep reacting to a global news flow, especially what's happening in China with, in terms of their stimulus announcements. Of course, the latest stimulus announcements were underwhelming once again. But given the kind of performance that the company has handed in the second quarter, and also the fact that this particular counter has also shaved off somewhere around 10% in the last 1 month or so, would you say that the leg of sell-off that we have seen may be out of the way right now, or could there be any signals of any kind of reversal after the double-digit kind of loss that it has seen over the last 1 month?
Yes, if you say that, the stock has come down in the last 1 month, that will be an understatement because everyone was very bullish on this stock, even including us. Having said that, there has been a 2.5 yearly breakout for the stock at 630 odd levels, and that is why I was also very bullish. I expected the stock to move up to 850, 900, but that didn't happen. But definitely, this downtick is very good for this stock. Why? Because it has retested its breakout level. And once that retest has happened, expect now a good reversal and go back up towards its 52-week highs, which is around the 750 odd level. So from current levels, I'm expecting at least 750 to come in. The overall pattern is still bullish. So yeah, you can look to buy the stock at current levels. Your stop loss for the same should be 630 odd. And yeah, once that 750 odd level comes, that is where you look to book some profits.
Right. Okay, that's the view on a Hindalco. Of course, we are getting the first ticks now. Markets have opened. There goes the opening bell for you. So it's a good start as of now. A 75-point uptick on the index. So the Nifty is above that 24,200 mark as we speak. The Sensex also clocking in gains of somewhere around 250 points or thereabouts. The good part is the mid-cap index or the broader end of the markets have also bounced back. So there's a strong bounce. The mid-cap index almost up by 0.8%. So broad end of the markets have also recovered after the fall we saw yesterday. The bank nifty opens with a positive bias, 52,000 back on the charts. So hardly 140 point kind of a gain coming in on the bank nifty. But let's see whether or not we manage to build on that, because yesterday banks emerged as a key pillar when the markets were extremely volatile. The breadth is extremely buoyant as or positive right now. 2:1, that's the NSE advanced decline ratio for you. Almost, in fact, 3:1, that's the advanced decline ratio, pretty strong. I want to see what the other sectors are really doing, because the Nifty Bank Index is in the green, as I pointed out. In terms of other sectoral movers, you can see IT building on those gains. Remember, IT was an outperformer last week as well, and has been doing ever since the US election verdict really. So the Nifty IT index up another 0.5%. You have energy pack also doing well. Of course, crude prices have come off significantly, 3% drop overnight, and I'm sure OMCs must be doing well in reaction to that. Metals have also staged a good turnaround, 0.6% kind of gain coming in on the metal pack. Remember, metals were among the top laggards yesterday. Pharma also bounced back in the green. PSU banks doing well. Realty also 1% higher. So the texture of the market is on the positive side. It is pretty good, barring the FMCG pack, which is trading with a negative bias, extremely flat. All the other sectors are doing well. Let's take a look at the top movers then on the index. HDFC Life among the top Nifty gainers, but ONGC, remember the company reported numbers, operationally strong performance. So ONGC is the top Nifty gainer as we speak. Trent, yesterday we saw a very good report coming in on Trent from Morgan Stanley. Yesterday it snapped out of a 5-day losing trend. Today as well, building on those gains. So another 1% higher for Trent. That's among the top Nifty gainers. So is Hindalco, 1.5% gain. ICICI Bank, Bharti Airtel, life insurers like SBI Life, HDFC Life doing well. Tata Steel, BPCL, Sun Pharma, these are among the other gainers. What's not doing well is Britannia. 2% down for that stock. Of course, numbers weren't all that enthusing, although volume growth came in at 8%. It was the second straight quarter of 8% volume growth for Britannia, but Street is looking at the other wider performance when it comes to net profit and revenue, where it has missed estimates. Asian Paints yesterday was badgered in trade, seventh worst fall for Asian Paints yesterday. Today as well, it is among the top laggards on the Nifty, 1.5% lower for this stock. Dr. Reddy's, M&M's, these are some of the other counters. Looking at the open, Nirav, let me first ask you about your recommendations. What would you be keeping on your radar for today or for a couple of sessions?
Yeah, the first one is HDFC Bank. As I said, the leader which was sleeping now has awakened, and I believe on the monthly it has given a breakout. Very importantly, I expect this stock to now move up to 1850 odd levels, so that should be your target. You can buy this stock from a 4 to 5 day perspective for that target, and your stop loss should be 1720. This is one. The second one that I really like is from the IT sector, which is Enzar Technologies. At this point of time, this is one stock which has witnessed a height of higher bottom formation after the breakout. The breakout happened at around 550, 600 odd levels, and post that, the stock has moved up. Very good pattern. One can look to buy the stock at current levels. Your target would be around 800. 725 is your stop loss.
So those are the picks coming in from Nirav. But Nirav, what about ONGC? Good set of numbers. Profit and revenue managed to beat expectations. Operationally strong performance, but margins came in below estimates. But looking at the stock, that's among the top Nifty gainers. How are you viewing ONGC on the charts now? It's at 260 odd right now. What kind of levels would you be watching out for here? And also, since we are at it, let's talk about HPBP as well. Crude comfort emerging, 316 on a BPCL. What would you expect?
Yeah, so firstly, ONGC, this stock had witnessed about a 7 yearly breakout above 300 levels, and I expected this stock to sustain, but that hasn't happened. It has come back down towards its support area. Now, this is a very strong support area for the stock, around 255, 250 odd levels. Expect the stock to move up from here. Don't see much downside, at least for the stock at current level. So yeah, it can probably consolidate, but don't see much downside. So yeah, at current levels, look to add positions here, and on declines up to 250, 245 should be your stop loss. At least the stock can bounce back up to 285 to 290 odd level. So that should be your target. Now, coming to HPBP, very similar story with the crude falling and with the charts very positive, and a 3 4 yearly breakout. Most of the OMCs we thought would really witness good buying, but that hasn't happened. In fact, IOC has witnessed a breakdown. So yeah, out of the three, I would not be buying IOC at this point of time. HP and BP are still better charts, so yeah, I can look forward to buying BPCL. That would be the first pick. I expect the stock to move up back to 360 odd levels. That would be the target on the lower end. 305 is a very good support area, and if that is broken, there'll be a breakdown as well. So yeah, that should be a stop loss for the stock.
Okay, that's about BPCL, HPCL as well as ONGC. But I also want to talk about an NMDC. The company has announced a bonus issue in the ratio of 2:1. Although numbers have been underwhelming, the stock is down almost 3.5% at the current juncture. Are you expecting more downside, because it's not very far from its 52-week highs? What is the kind of level that you'll be watching out for here, and which direction could the stock head from here, because it has been in a downtrend?
Yes. See, NMDCA, I don't really like that much. The chart is not that attractive. Once the breakout about 250 comes in, only then one can look to buy, but not at current level. So I would just advise to avoid this stock at this point of time. Probably the stock can come down towards 200 odd levels. It's in consolidation, so nothing much here.
All right, that's about NMDC. But on that note, let me take up some viewer queries that are trickling in this morning. Starting with Shrivardhan Gupta's query on a Suraj Estates. He wants to know whether he should enter this counter, with a 1 to 2 year perspective. Would you advise looking at this particular counter, or do you track this stock?
No, this is just a very fairly young listing. Around
Hmm.
800, this stock has made a top kind of a formation, and expect this stock to witness some amount of selling pressure at current levels. This stock has come up from 300 odd levels to about 800. So yeah, if you're holding on to this stock, it would be a good time to book some profits, because there is a likelihood of some more selling coming in. This stock can come down towards 550 to 570 odd levels. So fair downside from current levels.
Okay, that's the view on Suraj Estates. Hope that answers your query. The next one's coming in from Krishna. He wants to know your thoughts on an HBL Power. He's holding 200 shares at the rate of 650 rupees per share. The stock has seen quite a bit of a correction, and he's making quite a bit of a loss as well, because 546 is where it's at. Although on a YTD basis it has seen a good 25% kind of an uptick, but recently 1 month, 3 month charts will show you that the stock has corrected quite a bit. What should he do? Should he average, or should he book losses?
So, see, this stock has come up from 10 or 11 rupees from 2020, or it came up towards 600. So that's a 60x. So, such a big move, whenever, it comes in a particular stock, there is likely to be some consolidation or some profit booking, and that is what is happening in this stock. Having said that, there is a top formation which is quite visible in this stock, and there can be some more pain, at least from a near term to medium term perspective. I would just advise to book profits or book the loss and exit the counter at this point of time, because I believe this stock can probably see 450 or 400 levels coming soon. So on any rallies upwards, just exit it. Until then, you can probably, there can be one rally up to 580, 600. That is where you exit. You can keep a stop loss of around 525 for your longs.
Okay, that's the view on HBL Power. Hope this helps you. The next query is coming in from Satya CK, and I'm taking up this query because he's bought two stocks on your recommendations, Rico Auto as well as ITD Cementation, and he wants to know the strategy that he should adopt for the next 1 year.
Okay, so see, I think both these stocks were up quite decently in the last, probably 6 or 8 months or so. But yeah, Rico has come down quite a bit after hitting 150. I think I recommended around 110 odd levels. It went to about 150. The problem here is, auto as a pack is coming down, and even this stock post hitting 150 is down quite a bit. This stock can probably come down below probably 85 can act as a very strong support area, but once that is broken, you can see it come down towards 65 to 70 levels. So I would suggest keep a stop loss of 85 on a closing basis. If that is sustained, again, probably this stock can bounce back up towards 120, 125 odd levels. For ITD cementation, I am still very bullish because this chart is still very bullish at this point of time. Uh, Probably, this stock has miles to go. I think I've recommended this stock at almost every level, from 200 to 300. I don't know the buying levels, but expect this stock to move towards that 650, 700 odd levels. You can continue to hold on to this stock. Fundamentally speaking, the stock has very good order books and is in a good place. The only real caveat is, there is a buyout which is happening. But on the charts, yes, it's a higher top, higher bottom formation which hasn't been broken. It has, retested its support area of around 500, which is a strong support area, and you can keep a stop loss of 500 for your longs on a closing basis. Continue to hold on up to that 650, 700 levels. Once that comes in, look to book some profits.
Okay, ITD cementation still looking very bullish on the charts. The next query I spotted was on Hindustan Copper. This one's coming in from Satvika Ranganathan. Once your thoughts, numbers came out yesterday, margins came in below estimates, so to say. Saw a deceleration compared to the same quarter last year. This stock has also seen quite a bit of a sell-off in the last 6 months, 1 month, 3 months, and for the year it's barely giving positive returns of 1.5% or so. But are you seeing any case to buy it at these levels, at lower levels, because it has seen quite a bit of a drubbing, so to say. Any chance that it has already crossed or is in the oversold zone?
Yeah, see, this stock has entered the oversold zone. No doubt it is making a lower top, lower bottom formation, but from a near-term point of view, I think it has made its bottom. The support is 265. You can keep a stop loss of 265 and go long in this counter. This stock can move up towards that 300, 310 odd levels, which is a resistance zone. So yeah, until then, probably once it reaches 300 odd, you can look to book profits.
Okay, look to book profits. That's the call here. Just a couple of more queries to go. This one's coming in from Pawn Rajesh on an REC. He's making a loss of 10% here. What should he really do? REC also, of course, after the kind of phenomenal run that we saw in the likes of PFC, REC. PFC, by the way, saw a very good up move yesterday as well. But if somebody is making a 10% kind of a loss on REC, what would you advise?
REC, I believe, after a huge run-up, this stock will consolidate or witness some profit booking. I would probably tell the person to exit the counter at this point of time. Don't see much upside now from current levels, or you can continue to hold if you want to keep a stop loss of 510. But all in all, I don't see much upside. So there seems no point to continue to hold on to this stock. Rather, switch to something better. Probably something a larger cap like a HDFC Bank, not in the same sector, but which has quite a big potential now to move up. That would be a better option now.
All right, that's about REC. But I want to quickly club two queries and ask you about these two stocks, NTPC and Mangalore refineries. This one's coming in from Rajendra Prasad and Shreyas Kumbhare. These two stocks, what should one do if they have any holding, and if they don't, they are looking to enter, what should they do?
Yeah, NTPC, just like REC, PFC, it has seen a fair share of move, and believe now there should be some sort of correction or consolidation which is happening. A top kind of formation is seen, so I believe one can look to book profits in NTPC if you're holding for long, and if not, if it is not in profit as well, just cut it out, because this stock can probably come down to 350 odd levels now. So exit it. Something like an MRPL, I believe this stock still has quite a big potential. It witnessed a 10-yearly breakout, and a retest has happened recently. This stock can now again move up towards 250, 300 odd levels in the longer run. But from a near-term perspective as well, 180 is where I think this stock can come to. So look to buy this stock at current levels. Most of the indicators are in the sold zone and turning upwards, which is a positive. So from a near-term perspective, the chart is positive. You can continue to hold on to this stock. You can keep a stop loss of around 145 for your longs. 180 is where the first target would be. Probably it can run up towards its 200-day moving average, which is around that 200 levels.
All right, that's the view then on NTPC and MRPL. Hope that answers your queries. But with that, Nirav, would like to thank you for taking out time and joining in this morning and sharing your thoughts with us. Look forward to connecting again sometime soon. Have a great day.
Sure, thank you.
Well, on that note, just taking a look at the market, we've come off from the opening highs below that 24,200 mark now. So just about 30 points higher on the Nifty. In fact, the Bank Nifty also looking a bit iffy at this current juncture. Had slipped into the red, but now back in the green around that 51,900 mark. But then on that note, let me bring on board our second guest for today. Joining me is Ambareesh Baliga, who's a market expert. Ambareesh, great to have you on the show. There was one point of time where corrections were hard to come by. Markets took all the bad news in its stride. But now, any attempt at recovery, is fizzling out, and, we are barely managing to hold on to that 24,000 mark. So it's a 2,000 point odd cut from record highs, right? Here on, how does one really navigate this volatile phase of the market? Should one be more stock specific? What kind of a strategy should one adopt? How would you advise?
Yeah, can you hear me now?
Okay, I can hear you, Ambareesh. Go on.
Yeah. Basically, the markets have been on a one-way sort of a rally for the last 3 to 4 years. And we had seen exuberance, and at the same time, I think valuations had gone through the roof. A couple of sectors which were possibly quoting at about 8 to 10 times in terms of PE has started quoting at 10, 8 to 10 times turnover. I mean, that's a huge jump in valuations. Yes, you need to re-evaluate certain sectors because they started doing well. But then you can't be expecting so many stocks to become 10, 15 baggers. And that is, what is called, over exuberance in the market. And we have seen that in the past couple of months. I mean, even if you see this year, the markets have gone up from 20,000 Nifty to about 26,000, which is a huge move in just about 4 to 5 months. So, and I think one has to, thank liquidity for this sort of a reason. Even now, if you see, the retail investors are putting in about 25,000 crores per month. Every month in SIPs, and mutual fund total flows are more than 40,000 crores. So naturally, that has to be invested. So there was a demand supply sort of a mismatch because of which we had seen this sort of a move. But at the same time, somewhere I think the valuations come into play. And if you look at the Q1 earnings, they were, much lower than what was expected. But still, people are still expecting that Q2. I think the earnings could be slightly better. But Q2 also has disappointed. So it's a sort of a confirmed thing that the markets are overvalued and they need to correct. And along with that, we saw a number of macro numbers which have started disappointing. So it's quite natural that the markets have to correct. And here, I think we are currently in a situation where every sort of a move up is utilized to book profits by those who are stuck. And frankly, I'll not be too surprised if we start seeing the SIP flows starting to taper off from here on, because if you see, like couple of mutual funds, the last 2 to 3 months SIPs have started giving you negative returns. And in case we see Nifty falling at the 500 points move from here, the last 6, 7 months SIPs will start giving you negative returns. And once that happens, the psychology of a retail investor is that every extra rupee I invest, as long as I'm making profits, I'll put in more. The day that extra rupee starts making losses, they could stop investing fresh. And I think that will result in a much further fall. So I'm quite skeptical on the markets at this point of time. I would say that if one is fully invested, book profits to a certain extent. In fact, last couple of months, we've been in cash to the extent of about 40-45% because we didn't understand. The way the markets are going, clearly we are not too comfortable. So we got into cash. So those portfolios which are not yet into cash, I think it's still time to get into cash.
Okay, that's a view, a very circumspect view coming in on the markets, and SIP flows are expected to slow down here on. That's something, something interesting that you pointed out. But given the fact that Q2 earnings season has been quite bleak, any pockets that you would actually look at now? Some of the pockets have really disappointed, but banks, for that matter, have handed in good performance. If you look at the likes of HDFC Bank or so. Would you look at banking as a space now? And if yes, private versus PSU, where would you look at?
No, banking could be a place to hide because, we have seen a decent correction across a couple of banking names. Like a stock like HDFC, which again hadn't really participated too much in this rally because of the mega merger which they had and the sort of issues post that. But overall banking space, I would still be a bit cautious at this point of time because going ahead, at least for the next couple of quarters, I see the NIMs falling. At the same time, the costs are going up. So clearly, there would be margin pressure. And a couple of the private sector banks, as well as I would talk about NBFCs. There could be issues as far as the asset quality is concerned because they have been quite aggressive as far as the retail loans are concerned. And that's where the problem can occur going ahead. So one has to be a bit cautious in this space.
Okay. What about cement? There has been a wave of consolidation in this space, and if you look at some of the recent numbers, Shree Cements, although expectations were pretty muted,
Absolutely.
it has managed to beat that despite a sharp drop in profit. Ramco also, on the other hand, has handed in a great report card. Anything that's looking, worth buying at the current juncture? Overall, how is the cement pack looking like right now?
No, cement, in fact, we were quite bullish, but we were proven a bit wrong because of the sort of margin compression which we have seen. Although we are seeing a decent volume growth because of the sort of infra projects and the construction happening as far as the real estate space is concerned. But then clearly margins have been an issue. But then the other development which is happening in the cement space is the consolidation. And I think that's what will bring up the value for cement stocks. So I would say that possibly utilize this correction to buy into cement because the visibility, if you talk about the next 4 5 years, clearly I think there'll be a super growth, especially because of the sort of infra projects which are happening. And we should see, margins also expanding going ahead. So cement space is one where I think one should be doing some sort of buying in this correction.
Okay, look at buying cement stocks in this correction. But one stock that I want to talk about is Jubilant Food. Positive like-for-like growth in the second quarter. In a challenging market, all the strategic initiatives that the company is taking to stimulate consumption as well. Would you be optimistic on the turnaround potential of a Jubilant Food, given the fact that it has handed in a very good like-for-like growth despite rising inflation?
No, I would possibly wait for a quarter or two to see as to, how the performance turns out to be because, what we have seen is any sort of new forays which Jubilant Food has done in the past hasn't really worked out too well. So I would possibly wait for a while to see whether things work out for Jubilant Food or not. Because yes, this is positive from a short-term point of view, but longer term, I think I would like to wait for a while.
Okay, wait it out. That's the call on a Jubilant Food. But let's talk about quick commerce as well, right? How would you play this space? Only two listed players, right, from tomorrow. Zomato, of course, we saw how the entire story played out. They are profitable now. From sub 50 levels, they've come to somewhere around 250, close to 300 now. And now with Swiggy, of course, making its debut, the path to profitability is still hazy around there. So, would you look at Swiggy? What are your thoughts on this particular company? And Zomato, do you think the best of the run is behind or, the best is yet to come?
No, if you look at, the sort of a top line and, the sort of market share both of them have, it's more or less equal. But then look at the profitability. Clearly, Zomato is far, far ahead. And that's one of the reasons why I would go with Zomato. And the second reason is, the way they have, gone and turned around Blinkit and made that the major story for Zomato. I think that's something which I think is great as far as Zomato is concerned. And now with the takeover of the Paytm vertical, I think that is the other one which I think will start contributing. So I would be much more bullish on Zomato as compared to Swiggy. In fact, for the IPO, I had a avoid note as far as is concerned. So like post listing, possibly if we see a decent correction in Swiggy, maybe I think we'll have to revisit and look at the valuation at that point of view. From at that point. But currently, I would say remain with Zomato because still there's a decent amount of upside.
Okay, decent amount of upside still left in Zomato. But, of course, we saw what happened with the US elections, right? And since then, IT stocks have made a very strong comeback after a decent correction post numbers. So, what would your top trump trade be now? Would you play it through IT or would you say chemicals could also benefit from China plus one?
No, from a China plus one perspective, IT, I would be still a bit cautious at this point of time. Overall, I think the order flows had to improve, no doubt, as far as IT is concerned with the new regime in US. But then the issue is going to be with H1B visa, and that is going to increase the cost for IT. So IT, yes, I think one should look at possibly on a decent correction. But at this point of time, because of the changes which have happened, I would be a bit cautious. China plus one, I would clearly play with specialty chemicals because that's one space which I think will see a major uptick. And at the same time, stocks in like light engineering, I think that's where the exports will do extremely well.
Okay, last question really. If somebody has to look at the market from a bottoms up approach, and any stocks or sectors that's catching your attention, although you said that it's time to stay on cash right now, but if somebody wants to utilize this dip to buy into something, anything that's catching your attention from a bottoms up approach?
I would possibly look at the FMCG sector where we have seen a very decent correction. Again, because the sort of rural expansion which we were expecting in consumption didn't really happen in the last quarter, but I clearly see that happening over the next at least 1 or 2 quarters. So based on that, FMCG, because like I said, we have seen a good correction, so valuations have become comparatively decent as compared to the last 8 to 10 months. So at this point of time, yes, I think that's one space where one should do some amount of buying, even at the current levels. I would say something like Asian Paints. I mean, we have seen an extremely good correction after the sort of earnings which we saw. I think this was the lowest in the last 48 quarters, if I'm not wrong. So I think this is one space, where one can buy because there's a lot of skepticism across. But again, I would say this is a long-term buy. You shouldn't be buying I mean, from a perspective. Possibly, I mean, buy and hold for the next 12 to 18 months.
But Ambareesh, won't you be circumspect about the kind of trend that has emerged from FMCG earnings? There are concerns over a slowdown in urban consumption as well. Do you think rural
Right.
recovery, I mean, that will take shape in some time? Do you think that would be enough to, outweigh or outweigh the impact of a slowdown in urban consumption?
No. In fact, I would say that the urban consumption may take a while longer. It may take about 3 to 4 quarters for the urban consumption to get back. But I think rural consumption bouncing back over the next 2 quarters, I think will, I mean, more than compensate the sort of loss in the urban consumption growth. But then, see, when we look at a stock or a sector, we see as to what is discounted. Today, I think both these factors have been discounted, that the consumption is down across both urban and rural.
All right, point taken, Ambareesh. With that, I would like to thank you for taking out time and joining in this morning, Ambareesh. Always a pleasure getting in your insights and catching up with you. Look forward to interacting again sometime in future. Thank you.
Sure. Thank you.
Thanks a lot. Well, with that, look at the market. We've shaved off all the opening gains. In fact, the Nifty is just about to, in fact, slip into the negative territory as well. The Bank Nifty is already in the negative zone, although the mid-cap index, has come off from opening highs, but it is holding on to those some of those gains, 0.4% kind of an uptick on the mid-cap index. The breadth also, although in favor of gainers, has cooled off a bit. So 1.5 or 2:3, 2:1 rather. That's the breadth for you at the current juncture. So not looking all that great. We are maintaining that whole trend of opening in the green or managing to recoup opening losses, but not being able to sustain gains at higher levels. So the Nifty back in the red. 24,136, Sensex as well trading in the negative zone, but the mid cap index as of now managing to hold out in the green. With that, we've come to the end of this edition of Opening Bell. Thanks a lot for tuning in. Of course, have a great day and come back and join us on Closing Bell at 3:30 p.m. Where we will be talking about the market close and all the other stocks that would have moved in today's session. Have a great day and stay tuned to Money Control for all your other news and updates.